Thank you, Stephen. Good evening, everyone, and a warm welcome to our post-earnings conference call, quarter and the full year ended March 31st, 2020. As we are getting used to the new norm of life, I trust everyone and their families are safe and continue to remain so. I have with me on call Mr. Vijay Kumar, our CFO, Mr. Prasad, our Senior Accounts Manager, and Ms. Madhavi, our Plant Manager, and Stella, our advisors, our Investor Relations advisor. Our updated investor presentation has been uploaded on the stock exchanges, and I hope you would have had some time to go through the same in this last minute call. The fiscal 2020 has been an interesting year for all of us, and for FX even more so. This year saw the completion of our CAPEX cycle, and we are happy to announce that the new plant, after finishing trial runs and whatever teething problems were there in the beginning, has now commenced commercial production. While we await the approval from the health authorities, which is dependent on the negotiations with the Export Inspection Council of India, Government of India, the plant has already started catering to our US and other markets. This new facility for shrimp processing is located at G. Ragampeta in Andhra Pradesh, which is around 25 kilometers from the port road. And it has an installed capacity of 20,000 metric tons per annum. With this, our entire capacity is at 29,240 metric tons per annum. And it is operated by us entirely, and we are not dependent on any third party as such, which we were struggling with for the past 3-4 years. We have discontinued our lease facility for 6,000 metric tons during last year. And not only have we expanded our capacity, but we have also started a new product line, that is the ready-to-eat category, which is cooked products. Of the total capacity of 20,000 metric tons per annum at the new plant, 5,000 metric tons is earmarked for ready-to-eat products. We thank our investors and stakeholders for showing patience as the plant's commercial production and the operations took a longer time than initially planned. However, we are now focused on ramping up the capacity utilization as the COVID-19 situation improves. Let me now take you to how this global disruption caused by COVID-19 pandemic impacted the industry and our business. Until January, the first 2 months of the last quarter of the last financial year were very well done with the support of markets like USA, and India's exports in general has grown with around 30% to 49,000 metric tons in the first 2 months of calendar year 20. It's grown up by 30%. And so with that support, even though China was a little slow because of their holiday season, and also they were affected strongly because of the COVID-19, the first country in the world, as we all know, is China, which had its major impact. However, starting March, demand from the US started declining. This is, of course, mainly got to do, this is more towards the middle and end of March, when a lot of food service chains, the restaurant chains, have been closing down, which were almost around 60 to 65% of the shrimp imports are consumed through these restaurant chains and food service companies in the United States. However, some of that loss of sales to the food service companies has been compensated by the retail sales, because of a lot of consumers, end consumers, were moving to buying more products, food products from the retail outlets rather than preferring, or because of the lack of access to dining at the restaurant chain. Distributors definitely had higher inventories for during the end of March. Even our customers who are there in USA and European Union have been sitting with higher inventories because of this sudden impact of closure of food service chains, restaurant chains at a large scale. In India, by middle of March, we saw ground level impact on our operations as well. Lockdown was imposed on March 24th, and immediately there was on-ground disruption in terms of availability of labor, movement of stocks to and shipments to our customers. This this is at this point of time I would like to emphasize and also thank the support of the government of Andhra Pradesh, which was playing an active role with regard to saving the farming community, irrelevant of other businesses. That is a different point, but they were quite helpful in supporting the farming community, and they relaxed a lot of norms during the last 1 to 10 days of March and subsequently in the month of April 2020 to help the processors to harvest, to buy all the produce which was being harvested in a sudden panic by these farmers or farmers. Because that is mainly because of our activity being part of the food processing sector, and being considered even today as an essential service. Our operations resumed within a week, however, at reduced capacity. Our company has always believed in making sure that we grow along with all our partners, and towards this end, here are some of the things that we did. Since it was harvest season and with a general feeling of uncertainty among the farmers, we witnessed a steep correction in the farm gate prices. Basically, we had a very good tailwind supporting the company. Our commitment to ensuring the financial well-being of our partners, as well as farmers, meant that we purchased a lot of product from them into the inventory in the last fortnight of March and continued into the month of April also. The expansion we did on our cold storage unit was extremely helpful in allowing us to store this product for further processing. We processed this extra inventory in April and May, and we continue to process even now as we speak. And we have been dispatching that product to our customers as the logistical issues were being sorted out by the government of Andhra Pradesh with regard to shipment. On the hatcheries front, offtake of existing stock with seed by the farmers was impacted due to the lockdown. Even though the government could extend support to the farmers to take care of the produce which was already in the farms, in the ponds, they could not permit them to go for new stocking or fresh stocking so that they could buy the seed again from the hatcheries. Because of this, a lot of seed was drained out by several hatcheries across the coastline of Andhra Pradesh, and restrictions with regard to international flights also had an on the broodstock availability, which was slowly easing out during the period of mid-May and onwards. We expect operations to resume, and they have already resumed, and they are picking up slowly. In fact, a lot of group of hatcheries also have been efforts to stock on charter flights. Now let me take you through the brief highlights of our financial performance. On the revenue front, shipments of our finished products were disrupted during the last fortnight of March, which had an impact on the volumes and thereby revenues of the last quarter, Q4 of financial year 1920, to the extent of almost 13.5 crores. That has largely been the reason for an approximate 13% decline in revenues to 146 crores in Q4 FY20 from 167 crores. Considering it's 167 crores in the corresponding quarter of previous financial year, Q4 FY19. We also had as you would recognize that we also had a one-time income of around 12 crores, which was there in financial year 2018-19, because of refund from anti-dumping duties from the United States, which did not exist. As I had mentioned, it was a one-time income during that period. So that didn't exist in the current financial year of FY20. For the full year, our revenue stood at 846 crores compared to 896 crores in FY19. In terms of volume sold, financial year 20 clocked the sales of almost 12,243 metric tons, of which 86% was to the USA, 10% to European Union, and the balance 4% was to China, which is a new market for us since the last 18 months. The Chinese market was primarily explored by us since the end of 2018 and more of 2019, is mainly to use the benefits of, or rather make use of the advantages during the tailwinds which support our company during the high supply season. During the periods of high supply season, we were able to produce the commodity-based products for the Chinese market. So it always helped us to utilize our production capacity much better with the commodity products, because there's not too much of work involved with regard to base head-on or headless shell-on products, which are primarily exported to China. And so that is the reason we wanted to have this market, in spite of not really being interested in exploring the Asian markets for many years. Now, improved cost optimization measures coupled with lower raw material costs ensured that we were able to do a better EBITDA margin, 10.5% in Q4FY19 to 12.8% in Q4FY20. For the full year FY20, EBITDA margins were fairly stable at 12.2%. The cost savings which were involved with respect to this primarily being moving out of our Leeds facility totally, which was being done on a rented basis dependent on the quantity there. So we moved out of that Leeds facility. That was one of the major savings. And added to that, we also had a major advantage for the company, the hatcheries which we have opened up and scaled the operations to a higher level, because the seed supply for the past 12 months has been very instrumental in growing the network of farmers, not only in the state of Andhra Pradesh, but also in Orissa and Bengal. And we are able to take advantage with regard to buyback of that product from the farmers. So, and also the cold storages which were created in the new plant, have helped us in saving our costs because of not depending on the public cold storages. However, at this point I would like to emphasize that when the cold storage capacity, total cold storage capacity, including the new one, was not sufficient during the month of April, either because of the pressure on the company by the government department, like it was on the entire industry to support the farmer, or in other words, the advantages which the company was trying to take off during the tailwinds on the price level, we did utilize public cold storages in the month of April and May to support the product storage. Increased depreciation on account of commercialization of the new plant resulted in a marginal decline in our profit before tax. However, lower tax rates helped us improve our profit, with profit after tax at 9.2 crores in Q4 FY20 from 8.4 crores in Q4 FY19. For the full year of FY20, the profit after tax came in at around 61 crores, while the PAT margin saw a slight improvement at 7.2%. With regard to our financials, some key points to be noted is the inventory, as I had explained earlier, has increased, primarily increased on the account of large raw material purchases made in the last part of March month 2020. This is not reflective of our normal working capital cycle, and the first half of the current fiscal year should see the impact of this getting normalized. As I had also already informed you that the raw material was continued to be sourced or purchased irrelevant and irrespective of our shipments being done to overseas markets. So there was a pile-up of existing inventory for the shipments getting hampered because of logistical issues, and at the same time there was accumulation of newer inventories from that purchases which were happening from the farmers. Our liquidity position continues to be strong, and we are in a comfortable position to meet our requirements and debt obligations in the near future. Lastly, I would also like to update you all on the MEIS front, since we have been receiving this query in the past. So the Government of India has extended the MEIS till March 31st, 2021. However, please note that the government has removed or discontinued that short-time additional MEIS of 2%, which was there till December 31st, 2020. December 31st, 2019, I'm sorry. And from Jan 1st, 2020, that is the last quarter of FY20, we did not have, we had only 5% of MEIS and additional 1.3% of duty drawback. That I would like to thank you once again for joining this call in a short subject. And I now request Rachel to open the floor.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi sir, how are you? You're back in India?
I'm good, Nitin. No, I'm back in India. I just didn't want to take the risk with the infections on repatriation flights. Sorry to say that, but yeah, they're trying to be safe. And as I had mentioned in my opening remarks, I hope everybody, well-wishers and close associates of Apex, to be keeping safe along with their families.
Yeah. Hope you to also continue to remain safe. So coming to questions, sir, could you throw some light on how the procurement prices would have behaved between March and until now, and the inventory which you would have gathered on our books, has it faced any kind of pricing depreciation or something?
The first, your question on
procurement prices, how they have behaved?
Procurement prices in the March and then and now, because the pandemic and the lockdown scenario.
Mr. Chaudhary, sorry to interrupt, sir, but your voice is breaking up a bit.
Can you hear me now?
Yes.
Yes, sir, this is better.
Yeah, Mr. Nitin, as I was mentioning that during the third week of March, when this pandemic was showing its effect on the life in general, and the farmers panicking as such with regard to harvesting of produce in Japan, they fearing that there will not be a future buyer for them. They were very desperate to harvest this product out of their farms, and thereby which created a huge drop by almost 50 to 60 rupees lower. At that point, pricing was prior to the pandemic.
So sorry to interrupt, but once again we are unable to hear you clearly, sir.
Yeah, there was some... Hello?
Yes, sir.
Hello? Yeah, sorry.
Mr. Chaudhary, hello?
Hello?
Mr. Chaudhary, can you hear us? Hello?
Yeah, hello, can you hear me?
Yes, sir, it's better now. You may go ahead.
What we could hear was 60 rupees drop of PG.
Sorry?
You were saying 60 rupees drop.
Yes. There was a drop of almost 60 rupees, dependent on the sizes, of course. At that point of time, some of them was much higher, from between the prices from pre-COVID and post-COVID. There was a drop of almost 60 rupees at that time, and subsequently, now currently the prices are hovering around 350 rupees, 330, 350 rupees. This went down to under 300 rupees. This is on an average, by the way, because there are large sizes, small sizes, medium sizes, and whatever. So on an average, it had gone down by almost 50 to 60 rupees on certain sizes, and some of them it was around 30 to 40 rupees. and all these that lasted till almost April 20th, for almost a month, a little more over a month. The fall of prices to that extent was visible, and subsequently, as things started opening up much more with higher relaxations given by the government of Andhra Pradesh along with government of India with regard to operations, the prices have again started firming up, and currently they are settled at around 350 to 360 levels on an average. I mean, dependent on the sizes again. But I'm just giving you a rough estimate. In our actually, if you look at the full year, so in our company's with regard to our company, the last quarter the average was 256 rupees, because as I said, it depends on multiple sizes, right? So based on the sizes which were sourced at that point of time, while compared to the previous quarter, same quarter of the last year, it was 307 rupees. So there was a drop, as I said, almost to 50 to 60 rupees in general with regard to unit value. I would not elaborate much on the actual price of each count because they keep varying. But I gave you a generalized understanding of a drop of 50 to 60 rupees. That's what it is. So our average price was 256 rupees for the quarter Q4FY20. In the whole year, if we look at, of course, FY20 it shows a higher purchase cost of 315 rupees because entire 12 months considered, vis-a-vis 305 rupees for the entire 12 months of FY19. So when we look at the impact, the last quarter Q4 did give us a lot of quantity, which was mainly in the lower cost, at a lower cost price. Sorry.
Got it. And the finished goods that we have it on inventory as in closeout during the balance sheet date, that predominantly has got liquidated?
It is being done. As we speak, as I had mentioned in my opening remarks, that we are still doing, remember, things were not normal even in the month of May almost. Things were still we were all getting back onto our feet, trying to walk, even though we all like to run. So, unfortunately, with the restrictions and also apart from the panic at the farming level, at the primary producer level, there was panic among employees and workers also. A large part of workers did not make it for work during that period of the months of March 20th onwards, after that period, and April, and almost till the first week and second week of May. What happened was, as the workers started increasing, we started producing more products for China and other markets. And as further workers have increased, we started again producing for USA and European Union. So this manpower-related issues are also largely seen during this because of the effect of the COVID-19 in general, and that has been slowly getting back to its feet, and the workers were increasing, so the employees were able to get back to their jobs. Unfortunately, the impact of reopening, this is happening across the globe anyway, the impact of reopening of the economy or reopening of the country, whatever, or the states, is having its impact on the number of cases, which I believe all of you are definitely aware with what is happening. The cases are increasing again. So at this point, it is too premature to say that whether there will be another lockdown or whether we continue to have more cases and we may have that 3% of fatalities of the total cases. I don't know, but we did have one positive case in one of our pre-processing facilities, just to give you an update. And the pre-processing facility was shut down for the past 5 days. For the past 5 days from today, and we tried to do, after getting the approval from the government department officials and cleansing it, disinfecting it, we did start it again today with a very marginal set of labor, only with around 15 to 20% of the labor who normally is in that pre-processing facility. The other facilities, the processing plants, of course, have some issues because we are restricting the workers who are part of the red zones declared by the government, and hence all this has an impact. The production can be done and how stocks could get liquidated and be sold out. And get shipped out. I'm sorry. Yeah.
Got it. Got it, sir. And one last bit, how much will be saving because of the lease, which is not now being paid?
We were paying around 18 crores per annum, Mr. Nitin. And that, of course, I wouldn't say 18 crores, of course, includes the other costs. So let us say net impact of approximately around 10 crores minimum should be seen in the current year with regard to saving of, operating entirely in our own facilities, company's own facilities, no more rented houses for this year. So at least, that is how it is. Yeah.
Thank you, sir, and all the best.
Thank you very much, Nitin. Take care.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Hi, sir. Thank you for taking my questions. So my first question is basically, sir, there are media reports that the way India is countering Chinese imports, China is also doing the same way. Now, considering that 30% of Indian shrimps are exported to China, just wanted to know your view, how big this problem can be and what can be the repercussions of the same?
Sir, India has been, again, this has got to do with the government institutions and the government decisions. Whatever you are mentioning about blocking Chinese imports, I strongly believe are essential commodities. These are all other products, could be anything from electronics to whatever it is, now, or machinery or whatever. So in the case of, I'm not saying that the shrimp products or seafood products are the staple food, part of the staple food of the Chinese population, but they are a significant protein contributors to the Chinese population, and hence there was not any impact with regard to China blocking Indian imports of shrimp because they require the shrimp, they require the seafood products. They do definitely consume a large part of their protein using seafood apart from pork. But the main thing what has happened here is, as I just informed to the prior, as everybody is getting affected in the reopening of the nations and the states, companies, economies of this COVID-19, we do see an impact of holding up or deferring shipments from Chinese buyers again in the present month. So this has got to do with Beijing going under lockdown and everything is getting, I'm just giving an example of Beijing, the capital of China, but all major cities are getting affected severely, irrelevant of whether or not we can really take the cases statistics or cases numbers from China as an authentic one. That's a different part though. But as such, because of the COVID-19 issues at this point, and because of the reopening which is happening and because of the cases, there is a general impact on the consumption or with regard to the buying of the seafood or shrimp. And certain customers of ours did ask us to defer our shipments for a week to 10 days. And that's how this happened in this month. Just today, this happened in this month.
Understood. The second question is basically that in FY20 our volume decline was around 6%, but when I see the total Indian exports, shrimp exports, they actually grew by 5 to 6%. Now, have we lost any market share, and do you think that in the next year FY21, when the overall Indian export volumes look a little bit declining to us, do you think that you can push your products more because you have doubled your capacity?
The first and foremost thing, FY20's volume decline had got to do with one major factor, as I also had mentioned the same topic in a different angle with regard to the saving of exiting out of the lease facility to be around 10 crores per annum. But when we were exiting out of this lease facility during the third quarter of FY20, and pretty much we have completed most of it by the end of December and completely during the last quarter. There were issues related to it's not like we could just okay, we have exited out of the lease facility on December 25th on Christmas Day, and there you go for the remaining 3 months and 5 days. We had the capacity of 6,000 metric tons available to us in the new facility. So there was an impact largely, of course, because of the transfer of capacity from lease to own, which was the primary contributor to a drop in volume in general with regard to volume of shipments. And added to that, of course, the last month of March also, for example, almost 10 to 12 days, there were impact on shipments where, I'm sorry, but I did mention to a few of you in the past, I believe so, where some of our staff members and who were involved in production and some of our trailer drivers who actually are meant to be taking our shipments to the port were beaten up by the police. Now, we cannot blame the police on this because they're just trying to implement the government norms anyway at that point of time. But subsequently, thanks very much to the government of Andhra Pradesh, which got supportive at least with regard to that part of this sector, the seafood sector. Now, because of this transfer, that effect was there in FY20 in general. Transfer as well as COVID-19 took part in the last month. Now, in the current year, getting back to, that is the reason pertaining to our company, Mr. Dipesh. Now, with regard to the current year, the company has in fact transferred its entire capacity, and it has its 29,000 metric tons odd available at its disposal. However, as we scale up our capacity, utilize it, continue to improve it, in spite of COVID-19, we have all the 3 facilities functioning in a normal scenario. Unfortunately, which I had for 5 days to 1 week, dependent on the government regulations. So otherwise, we are very positive with regard to our business in general for the year FY21 with regard to how the volumes could be taken up. Of course, but please, you need to leave a little leverage to the impacts of COVID-19 with regard to workers. If with workers and employees are not there in the company's facilities or they are very minimal, naturally for that many number of days the production does get affected. But with regard to the sales, thanks to the own capacity coming into play from the first day of the financial year, thanks to the additional capability of the company with regard to ready-to-eat products, cooked shrimp, which was also there from the first day of the year, and we are actually utilizing our ready-to-eat capacity to a large extent. In fact, we are using that more than what our ready-to-cook capacity in the new facility could be utilized. But because, as we had emphasized many times in the past, that we were really looking forward to get this ready-to-eat capability into our to be added to our strength, because our customers, particularly in the United States as well as European Union, require these products, and they were buying it from other sources, whether in India or outside India. So we are positive of how FY21 is going to be with regard to volumes, subject to these issues with regard to labor and manpower. Because as far as infrastructure is concerned, it is good, and thanks to the coincidental strategy, I wouldn't say it was a deliberate strategy, that the company's focus is more on the retail segment in general. And I mean, we never knew that something like COVID-19 would come and it would totally shut down the restaurant chains or food service sector of the global markets. So fortunately for the company, even though we have been more into the retail segment for a different strategy, that is not to have a long-term exposure and to have a regular dynamic pricing which is more feasible, and also their promotions which could be done in retail. So we were also saved with that, because our sales continue to happen and they are not impacted at this point, except these worker issues and all that. Supply-wise, the reason which you are mentioning, that Indian supply or Indian shipments are in general going to go down, or it could be down because of the current year. We do not really see the supply being massively affected. As of now, there is an impact, definitely, but if you look at it, the farmers did not go for stocking after they panically harvested, not because they did not want to go, but because of the lack of availability of seed. Now the seed availability has started in the month of May, so they are all getting back onto their feet and everybody is stocking seed, and even Orissa and Bengal has opened up. Once the borders opened up between the states, the seed is also being transported to Orissa and Bengal, and I'm pretty sure once the airliners are in place, and I'm not very much sure about all the way to Surat and Bombay for the Gujarat aquaculture. Yeah, so that is the situation. Is we'll be good for this year. We look forward, thanks to the 29,000 metric tons capacity available to us, and also in that 5,000 metric tons being ready to eat capability.
Understood. So my last question is basically that your employee expenses have come down to 44 crores in FY20 from 48 crores in FY19. Now, how is that, given that you have set up a new capacity which is double the size of your previous capacity? So do you think the employee cost will increase massively in FY21, or this is it?
Mr. Deepesh, employee cost in FY21 will increase. The reason why employee cost in general has dropped down significantly in FY20 was also because, as I had mentioned, it was not a 1 day or a 1 week affair of moving out from a leased facility to own facility which was located almost more than 300 kilometers, around 400 kilometers away. So there were several employees and workers which we had to let go in the leased premises, and subsequently we were getting into employing them and recruiting them in this area, in Kakinada area. So there was this is all part of that feeding purpose which I was telling you. So naturally, this FY21 there will be certain amount of increase in the employee cost. There's do not at all think that it will not happen. It will happen because now it is now in this year we are gearing up to fully utilize our own capacity of that 20,000 metric ton. Dependent. Of course, it's not that the first year is going to have the entire capacity being utilized, but as we continue to increase the utilization of the new capacity in our own facility, definitely the employee cost will increase. But I'm not sure about predicting to what extent it would go. But we are definitely looking at cost-saving measures, and also we are now changing our methodologies with regard to workers, making it more output-related rather than just fixed salary. So we are also incentivizing them so that we get more output in general. So we will see various ways. We are exploring various methods for that.
Okay. So lastly, can you give me just export incentives number in this quarter, please?
Yeah, just a minute. I think Vijay Kumar will provide that. Vijay Kumar, check.
Export benefits. Just for FY20.
Last quarter, sorry Deepesh, you were asking last quarter or the full
last quarter?
Sorry.
Last quarter. Last quarter, FY20, 9 crores 10 lakh. Hello?
Yeah, how much?
Sorry.
9 crores 10 lakh.
Sorry, 9 crores 10 lakh. Okay. Thank you.
Thank you. The next question is from the line of Nitin Awasthi from East India Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. I didn't get that figure. So the export incentive for this quarter is what exactly? Absolute number?
Vijay Kumar. You said 9 crores was for the quarter or?
9 crores of quarter, and expenses includes 2 crores 36 lakh. The net export benefits are 6.73 crores.
So your voice is breaking, sir. Can you repeat it? I'm sorry.
Yeah.
Because you have just said 9 crores, so there's a confusion.
Can you speak closer to the handset, please?
Yeah, right. 9 crores 10 lakh on the export benefits, and the anti-dumping duty is 2 crores 36 lakh. So net export benefits 6.73 crores.
So I'm sorry, Nitin. Also, I need to correct to Deepesh also. So it was a net of 6.73 crores. The actual incentive which was there for the net of incentive. Yeah, incentive which was available for the company in this quarter.
So about 6 crores, roughly 6 crores is the export incentive and roughly 2 crores, 2 to 2.5 crores is the duty drawback, right? So totally it's 9 crores for this year.
No. When they said export incentive, it includes MEIS and duty drawback. Is it?
Ante.
6.73 crore. It includes. See, what he was trying to say is with regard to the accounting thing, it was where when we always say incentives, it is supposed to be net of we net it out with our duties. So when you actually, so that is the reason it is, it's 6.73 includes MEIS of 5% and also whatever duty drawback which is applicable.
Okay, so what was the hatchery sales for the quarter gone by?
The seed sales for the quarter 4.5.
4.5. Okay. And the culling of the seeds that you mentioned that the hatcheries had to do, that happened during the quarter or in Q1 of this year?
Towards the end of March. So whenever the lockdown was started, pretty much from then, all the hatcheries were closed down, and except maybe nearby farms could be catered to, but most of the hatcheries could not cater to anybody's seed requirements, and they had to drain it out. Not just our company.
Okay, so got it. And then I have got this news that the Andhra Pradesh government has put a ceiling on the PL prices. Is that affecting the company negatively?
Mr. Nitin, yes, governments want to do what they want to do. Of course, keeping everybody in mind. With regard to, I don't want to comment too much on that, but with the strategy of the government, but with regard to the prices, what they have asked or actually requested the hatcheries to keep a cap off at 35 paise per seed is not going to affect the overall profitability of the company with regard to the seed sales. Yes, it may impact a marginal, it may reduce a little bit, but it's not going to affect us in a significant manner. And the other important point is with regard to seed, we have totally stopped giving any bonus seed which is generally given to the farmers to take care of transit mortalities and all that. That is being stopped in the present regime of this seed price being capped at 35%.
Got it, sir. And lastly, sir, you said that 35 crores sales we lost during the quarter because of the lockdown and all the issues that came by. So we realized that sales in the consequent quarter in Q1?
Yeah, it is being done. As I said, April was definitely better than March 20th to 31st, that period when the lockdown was in place. Definitely it was much better because workers started coming back towards the second week of April, and slowly we started also moving out those shipments which were stuck with us towards the end of the quarter of FY20. So yes, we are looking at shipping out all of them, and we are continuing to do that as we speak also.
Okay, sir. So lastly, just one last question. I think right now you would have some visibility of the next 3 months. So for the first half of this year, what kind of volumes are you looking at if it is possible? I know that the COVID situation is quite dynamic to predict, but still that you would have at least the next 3 months, I believe some visibility would be there. So first half, what kind of numbers are you looking at, volume numbers?
Mr. Nitin, I'm pretty sure neither you nor me nor anybody is in a position to actually calculate the impacts of COVID-19 when it is. Like as I told you, one of our facilities was shut down for 4 to 5 days. So at this point it is, I don't know how it's going to happen unless if anybody can say, from July 1st it's going to be great. Or from July 15th, like for example, the railways had mentioned that, the airlines have mentioned that there will not be any bookings till July 15th or whatever. So they're keeping on postponing their dates. Same way, we are putting in our best efforts. We are observing physical distancing. We are checking the temperatures of every employee entering the company's facilities. They are also checking their oximeter levels. because as you know, we are taking all the necessary steps which are required to ensure that whichever employees are entering in, we are doing our best to ensure that we are able to get the work done. So yes, we are putting all our efforts. So definitely we look forward for a positive result as such. But again, it's all subject to the conditions. I hope you understand that.
Of course, sir. We got it. Thank you so much for answering my questions. It's the best of luck to you.
Thank you.
Thank you. The next question is from the line of Utsav Chowcharia from AKB Tranksin. Please go ahead.
Yeah. Hi, Mr. Chaudhary. Just a few questions. One was with respect to the new capacity. What kind of utilization level would we see considering the food service sector is going to be hampered for the next maybe 2-3 quarters in the US and the EU?
Sir, first thing is with regard to the new capacity coming into play, that is a general thing which had happened for the company, which was already planned. With regard to drop in sales, I think I mentioned to one of the earlier callers, to the participants, one of the earlier participants, that the company's strategy of balancing out its business between the food service sector as well as the retail sector has in one way paved the company to take advantage of in these bad times. It is not something which we thought that the food service sector will totally close down. However, in a general 60% of concentration of shrimp sales into the food service sector, most of it 60 to 65%, around 35 to 40% goes into the retail. In the company's case, it was 50% and beyond of the retail itself. So that actually helped us, and we are pretty confident that it will continue to help us in the forthcoming months and quarters also. So as such, yes, there is a little bit of demand related issues. It has been slowly picking up after the reopening of the United States and the European Union economies, as there are a lot of people who are protesting with regard to their right to live. So a lot of food service restaurants, the restaurant chains have opened up, primarily with outdoor dining until last week. And from this weekend, we are hearing more of indoor dining. However, these are all subject to matters whether the customers would be interested in going and sitting, and sitting in the restaurant and dine inside or not. Those are all subject to matters, but definitely things are looking in a positive direction in a negative time. We need to see how well we can take advantage of these positive, measures or positive circumstances. Sorry.
Right. And one more question with respect to ready-to-eat segment, which you just mentioned that we are using that facility extensively. What kind of margin expansion are we seeing with respect to the regular variety of shrimps?
So generally, the ready-to-eat realization-wise, is minimum $1.50 to $2 more than the ready-to-cook. However, this is also dependent on the sizes, because the smaller sizes are not given the same realization increase. With regard to margin, the realization is such $1.50 to $2 range minimum. And with regard to margin, if you look at it, we also do have additional costs and some yield losses because of ready-to-eat. But the additional realization actually makes us to have a better margin for sure. So I would rather comment on the realization part, which is because it's dependent on the sizes what we do and the kind of products which we do and the costs which are involved with the margin expansion. Okay, but definitely we are having higher realization. Like how in ready to cook I had mentioned, the value-added product is of a better realization than commodity product. Same way, ready to eat is a better realization than value-added product of ready to cook. Very simple.
And could you also give us some sense regarding the current shrimp prices internationally?
So current shrimp prices, of course, we are back to the levels of pre-COVID-19, if that's what you are wanting to know. So I'll keep it simple. We are almost reached pretty much back to the levels of pre-COVID-19. Now, demand, consumption, they are all subjective matters, but overall, that major issue during the lockdown period of 2 months for globally, whatever price issues were there, they have all normalized and stabilized, and we are back to realizations of pre-COVID-19, that is for sure. It's just that we need to see how we can deal with the volumes and sales, etc.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Vincent Andrews from Geojit Financial Services. Please go ahead.
Hello, good evening, sir. Only one question. Other questions were already answered. Sir, out of the inventory, that is 15 crore around finished goods and 20 crores around raw. So out of that inventory, can you please give some idea about how much you shipped or able to ship in April and May or these 3 months?
You were talking about the finished goods and the semi-finished
Yeah.
goods and unfinished goods. Okay.
Yeah.
To tell you the truth, the entire finished goods, most of the finished goods have been, whichever is under the finished goods category, most of it has been already shipped out as of date. We are right now in the process of utilizing these unprocessed or semi-finished goods at this point, also buying some certain raw materials to produce those sizes which are not there part of our inventory. So whatever inventory in the form of finished goods as of March 31st, 2020 has been, most of it has been already shipped out. There's nothing, most of it has been, there's a significant part has gone. So there's no issues with regard to that. Now we are working on utilizing the inventories of semi-finished and unprocessed goods, which are also at a very high level compared to our general business cycle as such. We are utilizing that right now as we speak.
Can I assume like the volumes for the first quarter of the current financial year will be last financial it was the revenue was 221 crore. So this quarter, how much percentage as a on a YOY basis? How much percentage it will be?
Sir, first thing, of course, you would know that the impact of COVID-19 continued even into the first quarter of this financial year. It's not about sales, purchase prices and all that. I did mention to one of the earlier participants that even the employee-related and worker-related issues and logistical issues were also there. It's just not about customers and farmers. So definitely, we were looking at a higher level than last year, and so in general, I'll not be able to give you a number or specific range at this point because we are still waiting. Once the quarter is completed, once the results are available, we'll see. But we are have worked very tirelessly in these present 3 months of this quarter, and we are continuing to work. We are just facing certain uncertainties because of the COVID-19. So we definitely think we will be able to do, but again, it is subjective. I can't talk too much about it. I hope you understand.
Okay, that's all. Thank you.
Thank you. The next question is from the line of Siddharth Mota from Principal India. Please go ahead.
Good evening, sir. Sir, are you confident that large portion of additional capacity will get consumed by your existing client, or do we need to add some new clients?
So Siddharth, we have had quite a significant number of clients whom we have reduced selling to in the past 1 to 2 years as the volumes grew up in general because of lack of own capacity. Once we started this new capacity utilization, we have touched base on all of those old clients. And we also have newer clients this year from markets like China and USA also, where we are taking this business. But largely, the expanded capacity, the new capacity, largely will be taken care by, most of it will be taken care by the existing team. There will be if it is a new client, it will be first year. We never expect wonders to happen with a new client in the first year of business for sure, as it takes time for them to understand us, for us to understand them and their requirements and our capabilities. So it is definitely for the first year, it will largely be with the existing clients of 2019 and prior.
Sir, whatever visibility that you have, so do you think that the large portion of your additional capacity, or one can say around 27 or 28,000 metric ton, it will be utilized within 3 years, which is starting 21, 22 and 23?
Sir, definitely we should be able to utilize over 2 to 3 years. And except the fact that of the impacts of COVID-19, which I don't know how long it will continue, but in a normal scenario, in a normal business environment, we would have definitely utilized it in the first 2 to 3 years of commencement of production, starting from this financial year. So I need, we are not in a position to exactly comment about this year, but definitely we hope that things will be much better towards the end of this year, and we'll be able to do life as all of us will be able to live as normal life. And for sure, yeah, in the next financial year, that will totally be completely be utilized to the maximum possible of the installed capacity of 20,000 metric tons.
Correct. So recently, Vietnam has signed FTA with EU. So by any chance, it will have any impact on the shrimp, in the sense that whatever we export from India to EU?
Sir, the FTA between Vietnam and Europe, EU nations has been in the making for almost 4 years, and they finally have signed it. It is very unfortunate that the FTA between India and European Union nations, which was in the making for the past 10 years, has yet to be come to a shape. Okay, that's a different point. There will be certain impact on the preferences of the EU customers, definitely. I'm not going to say that there's not going to be any impact. There is certain impact with regard to that, because they are going to import from Vietnam at 0%, while they have to pay around 3.5 to 4% around 4% with regard to India. There will be certain impact, but our cost of raw materials could also keep us competitive with regard to the competition given by Vietnam. But yes, for sure, that 0% duty tariff products from Vietnam will definitely have an impact on the way India does business with European Union. Yeah, for sure.
Okay. And sir, can you also say that have you started opting for some tax and the other incentive or the benefit for this new facility?
We have had some issues with that with regard to tax. I'm sorry, can you repeat that question? I didn't understand. Did you mention incentive or tax? I'm sorry.
Sir, both actually. Sir, both. If there is any, as far as tax portion is concerned, and any other incentive like the power or the capital subsidy which state government was supposed to give to you people.
First thing regarding the tax benefit, the tax part, the company has adopted tax regime. That new tax regime is only applicable to an entity if and only they do not use any other tax incentive provided by the Government of India. Since the company has decided in the third quarter itself that we will be opting for the new tax regime, we are not going to take any specific benefits with regard to taxation benefits with regard to a new facility which was constructed, which was completed last year. So keeping in mind, there will not be additional tax benefits. We are in the new tax regime of this 25% after all the cesses and whatever additional cesses are there. So that is regarding the tax part. And with regard to incentives, we did not go with the government of Andhra Pradesh. We have been going with government of India. We are still pursuing with them. There have been certain issues with them. We are still pursuing with regard to that grant which was supposed to be given by Ministry of Costing. So we would let you know in future whenever we get it, if we get it. In the present crisis of funding in general with regard to central government schemes, which I believe you are very much aware about. So we need to see how it goes.
Okay. And sir, the last question from my side, for upcoming season, whether farmer have started stocking the seed, and do you think that that availability of size will not be a problem for Apex Frozen Food?
Sir, the farmers have started stocking around mid-May. This is after COVID-19 issues. Mid-May they started stocking. They are continuing to stock. There will not be any issues with regard to availability of supply in general, which we are foreseeing. There will be a sufficient amount of supply, but there will be diseases always prevailing, and any sort of climatic conditions. For example, like the recent cyclone which happened in Bengal and the northern part of Orissa did have certain impact on some of the farming areas there. So these are some things which are not under anybody's control. But otherwise, with the way the feeding pattern is going on, definitely we'll continue to have good set of supply for the next crop, which is expected from middle of August, around first week, middle of August most likely. Yeah. So right now all the farmers are feeding the seed, and we do not believe we are going to have any significant issues with regard to sizes as such with regard to Apex Frozen Food. Now, because we have this additional capability also, we will definitely be able to use any and every size harvested in the shrimp category for sure. That's how we have planned up. We are working much more in that direction. So we are not going to get into that problem of not able to utilize the size. We'll do our best, definitely, and we are working on that. So at any given point of time.
Okay, sir. Sir, on this Vietnam FTA that they have signed with EU, so post that, whether we have reduced our price by any chance as far as our export to EU is concerned, or we have taken any price correction?
Sir, when there is an impact, and I said there's an impact of Vietnam, for sure there will be an impact. And yes, the customers are interested in buying at lower prices because of the lower levels available from Vietnam. They do ask us, insist on us, but there are certain segments like certain certified products and certain category of products which may not be available from those Vietnam processors where the customers are paying prices, but not exactly to the rest of the market level, rest of the other countries level. But yes, there is an impact. We had to reduce to certain extent, and remember that will in tandem have an impact on the raw material prices.
Okay, sir. Sir, best wishes for upcoming quarter. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take the last question from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, sir. Just keeping the scenario like where we stand today, not worsening from where we are today. What's your assessment? Have the overall shipment-related challenges or processing-related challenges improved from the way they stand at the start of April and today? And if that improvement was a parameter, then have improved to 50%, 60%, if you get some quantitative number to it?
Sir, the first thing, definitely there are improvements from the time of April and now with regard to certain points like logistics, which you mentioned. We are able to do our shipments in a much better manner. However, there have been some new constraints which came up where we have something called blank vessels, where the ships which are coming to India are being cancelled, and thereby affecting the availability of equipment and affecting the availability of sailing bookings, basically, to a certain extent. But these are all changing scenarios, and we are sure we will overcome it as the volumes pick up, or volume of shipments, not just in shrimp or seafood, but in general, when the containerized volume picks up in these ports. That is with regard to logistics part. And the workers, of course, as I had mentioned to you earlier also, there have been some issues with certain set of workers. In the norm, if we are at least doing what we are able to do, or were able to do in the month of May, and we further look at enhancement in the volume, we will definitely be doing much better. Now, unfortunately, this week we had to see some stray incidents of having a coronavirus case, a COVID-19 case within one of our facilities. Like these things are something, sir, which are unpredictable. I hope it. We will definitely see we have a strength. The strength is our capacity and our capability. The more we put efforts to utilize that capacity, the better it is for the company, for sure. There's no second thought to that. But there are some things which are not even able to be predicted by anybody, in the world today. So I don't. So we will all our efforts. For sure, we are looking positive about it because our demand has regained back. We are slowly increasing our shipments. As I said, we are doing a lot better than what we did in April, or even what we did in that last fag end, or what we could do during that last fag end of March, end of FY20. Definitely, we are doing much better. We will continue to strive to do much better for sure.
Thank you.
Thank you.
Thank you. I now hand the conference over to Mr. Subramania Chaudhary for closing comments.
Thank you very much, Steve. I really thank everybody for making it to this call in such a short notice. On a Friday evening, I'm sorry we would have been disturbing your weekend evening with your families and friends at this hour of the day. And I hope that you have a good weekend and please stay safe along with your families. We are hopeful that upon resumption of normal activity, we should be able to capitalize on the strong position that we have been building for the company. Thank you very much and appreciate one and all. Good night.
Thank you.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.